Here's a number to fry your circuits. Humanity has mined around $13 trillion worth of gold. But Bitcoin? Max supply, 21 million coins. That's scarcer than first edition Pokemon cards, vintage Jordans, and your uncle actually paying you back. And here's the kicker. While gold needs vaults, guards, and vaults for the guards, Bitcoin fits in your phone or your brain if you memorize a password. Imagine walking through TSA with $1 billion in your head. So the real question isn't, is Bitcoin money? It's, is Bitcoin better money? Is it the gold upgrade the digital age never knew it needed? Quick disclaimer, this isn't financial advice. I'm not telling you to sell your house for Bitcoin or Venmo Satoshi from the grave. This is for education and entertainment only. Think of it like financial mythbusters, except the explosions happen in your portfolio. Money has been through more phases than Facebook, Meta. Seashells, salt, shiny beads. The island of Yap literally used stone wheels so big you couldn't move them. Your neighbor just had to agree that the giant boulder in his yard was yours. Then gold entered the chat. It nailed the money criteria. Scarce, durable, shiny enough to hypnotize every empire from Egypt to Rome. It was the universal language of wealth. Fast forward. In 1971, Nixon unhooked the dollar from gold. Overnight, paper wasn't backed by anything but trust. Since then, the dollar's lost over 85% of its purchasing power. Translation: your grandpa's dollar could buy 5 Big Macs. Today, it buys the bun. And here's the problem with trust-based money. Governments treat money printers like frat boys treat keg taps. Every fiat currency in history eventually fails. Rome diluted its silver coins until they were basically tin tokens. Weimar Germany printed cash so worthless people used it as wallpaper. Zimbabwe had trillion-dollar bills. Kids made kites with them. Even the US dollar, the heavyweight champ, has cracks. Since the pandemic, the Fed printed nearly 40% of all US dollars in existence in just 2 years. That's not stimulus, that's monetary Red Bull. The result? Inflation at 40-year highs, savings accounts paying you less than the gum in your pocket, and people starting to whisper, "What's after fiat?" And that's where Bitcoin kicks in, not just as a new money, but as a rebellion. 2008. Banks collapsing, Lehman Brothers dies, governments bail out the guilty. Trust in the system craters. Out of nowhere, an anonymous figure, Satoshi Nakamoto, drops a 9-page PDF that changes history. The Bitcoin White Paper. It wasn't just digital money. It was a giant middle finger to Wall Street. A system capped at 21 million coins, verified by computers, not politicians. Decentralized, borderless. And the first block of Bitcoin, mined in January 2009, it literally contains this newspaper headline: Chancellor on brink of second bailout for banks. Bitcoin's origin wasn't random. It was a protest coded into money. People laughed. Magic internet money. But 15 years later, Bitcoin is a $1 trillion asset. Beanie Babies can't say the same. But why digital gold? Why not just call it digital monopoly money? Gold is scarce, you can't print it. But miners still dig up 1 to 2% more every year. Bitcoin? Hard capped at 21 million coins. Ever. No bailouts, no print button, no, oops, we found a new mine. Every 4 years, the Bitcoin halving cuts new supply in half. In 2012, 50 Bitcoins per block. Now, just 3.125. Supply keeps shrinking until 2140, when new Bitcoin creation stops forever. But scarcity's only half the recipe. The other half? Durability and security. And this is where Bitcoin flexes. Gold is durable, it doesn't rot, but it can be stolen, counterfeited, or confiscated. In 1933, FDR made it illegal for Americans to own most gold. Imagine waking up and Uncle Sam saying, "Thanks for the gold bars, patriotic donation accepted." Bitcoin flips that script. It's secured by the world's most powerful computer network. Every transaction is permanent, every coin trackable, every block verified by thousands of machines worldwide. To hack it, you'd need to outcompute the entire network, currently using more energy than Argentina. Good luck with that. And unlike banks, Bitcoin doesn't close at 5 p.m. or on weekends. It's money that never sleeps. But here's the thing. Durability means nothing if nobody uses it. So who's actually stacking sats? 10 years ago, Bitcoin was nerd money. Today, hedge funds own it. BlackRock launched a Bitcoin ETF. Fidelity offers it in retirement accounts. Tesla holds it. Even pension funds are dipping in. El Salvador made it legal tender. Critics laughed, then remittances, money sent home from abroad, started moving cheaper and faster than through banks. The IMF may hate it, but Salvadorans are saving on fees. Adoption follows a pattern: ridicule, resistance, then rush. Gold went through it, so did the internet. Now it's Bitcoin's turn. If you're starting to see the shift, say hello in the comments. I'm curious if you're stacking Bitcoin, stacking gold, or just stacking popcorn for the show. But wait, if Bitcoin's digital gold, why does it act like a roller coaster strapped to a rocket? Yes, Bitcoin swings harder than Elon Musk's mood on X. Down 70%, then up 500%. But that's adoption in action. Gold was volatile too. In the 1970s, when the US ditched the gold standard, gold prices tripled in less than a decade. Bitcoin's just younger. It's in its teenage years. Zoom out. Every cycle has higher highs and higher lows. 2013 crash, recover. 2017 crash, recover. 2021 crash, still higher than 2017. Long term, the direction's clear. Volatility isn't a bug, it's a feature of monetization. And speaking of features, Bitcoin isn't just about price charts. It's about what it unlocks. Bitcoin opened Pandora's box of decentralized trust. Out of it came smart contracts, DeFi, NFTs, Web3. Love or hate them, they're all children of Bitcoin. But Bitcoin's still the trunk of the tree. Everything else is a branch, and its true power isn't get rich quick, it's get free permanently. Free from banks, borders, and bailouts. That's why nations in crisis, Argentina, Nigeria, Turkey, see Bitcoin adoption spike when their local currencies implode. It's not speculation there, it's survival. Which brings us to the trillion-dollar question. If Bitcoin is digital gold, does this mean the end of money as we know it? Or the beginning of something bigger? Gold ruled for millennia. Fiat's ruled for decades. Bitcoin's just 17 years old. But history is clear. Money evolves. Bitcoin doesn't have to replace the dollar to win. Just like gold today, it's not your Starbucks money, but central banks hoard it for a reason. Bitcoin can be the same, except borderless, digital, and incorruptible. And here's the wild card. If governments, hedge funds, and central banks all eventually hold Bitcoin, it doesn't just become digital gold, it becomes the backbone of a new global financial system. So here's the bottom line. Bitcoin is scarce like gold, durable like nothing else, portable like data, and immune to inflation. That's why it's not just another asset. It's the closest thing we've ever had to digital gold. Does that mean Bitcoin holders never have to sell again? Maybe. Because if it becomes the world's reserve asset, selling it would be like selling oxygen. You don't trade it, you just hold it while everyone else scrambles to get some. If that idea lit a fire in your brain, hit subscribe. Until then, zoom out, think long term, and remember, the people who understand the story of money usually end up with more of it.